let's go through the market, pre-market. Okay. Let me just double check with the SPY, see what's going on with the SPY on the pre-market. Okay, looks like the pre-market's going up, and the pre is like 413.58. So basically, there's a resistance line over here and the support line over here, and what we're gonna do at the open. So basically, if the SPYs open above the 413.85, like basically it's jumped with a gap, higher open with a gap, and then we could do I believe we probably gonna see another high for today. But overall, like the day chart looks really bad. Actually, it's high shoulder, and another shoulder could be 415.42, like somehow like between the 1495 to 413.75. Let me see what is this one on the SPX. Yeah, pretty close. I mean, the level for SPX will be the 4168, close to the 4168. So I would do what I would do if today we go to the 4169. I'm gonna add a short position at the beginning, like just open the short position. And what I assume, it probably gonna go above. I mean, if it's go above like 4200, I'm probably gonna add another one. And for the over the long term, I believe, at least for mid to long term, I believe it will go down to at least give another leg down to the probably gonna be 3800. After the 3800, we'll see what's happened based on the market conditions. And there are some data. Let me check. For the dark pools, we have yesterday the dark pool was basically a little bit incoming money, but I don't think this will be a recommendations or any like big effect for this one. So it doesn't, I mean, it doesn't have any significant impact based on the dark pools. Just let me see the Qs. I see we go to GM first. Okay, for sure. The general models. The GM. Let me see the chart over here. Oh, this is a pre-market. Regular trading hours. I mean, it's downtrend. Currently, it looks like a downtrend for the 5 minutes, but the day chart. The day chart. Let me do just draw some lines over here. Goes horizontal lines, goes this position, and trending line. I mean, it looks like it's breaking the downtrend line for since like February 23rd until today, but I don't think this is good ticker to trade on because based on the macroeconomic and the GM is way behind on the electric cars. I mean, compared to the Tesla. So I don't like the GM. So and there's a big resistance over about like 41 to 43 this area. So I don't think we could trade on the GM for sure. And all the moving average are is still I mean it's still in the downtrend. So I don't think the GM is a good ticker. Let me back to the Qs for now. The Qs it's 326.69. Let me check on my end over here. Okay, so the spice is like in the pre-market it's like 0.34%, and the Qs is only 0.14%. So I will assume the technology stocks in the Nasdaq probably is not pretty good. I mean, at least for the pre-market. Let me see here. Okay. I mean, I don't know how do you guys think about this candle, but I don't think this is good signal. This signal normally represent for the uh, the money rush to like down level and buy a lot retail investors buy the stocks back or buy the Qs back, and it gives me a like really bad feels for the stock market. And the last time I see a really big uh, this shape was like back to 2020, like about September. I clearly remember there was only 3 days and the market dropped like 15%. So I don't like to trade like as a bull market, but who knows? It probably gonna go maybe 328 and then head down to another like we go like reversal. So today, yeah, we have some data for today. Let me pull that data out. Let me see. The data. How can I pull that out? Not this one. Add a picture. The data. So we have a yeah. Just give me a second. Let me figure out how to put this chart. Okay. So we have the pre-market. We have the import price index, and I don't think this will be the important one, but there was a one at 10 a.m. It's Michigan settlement, like consumer settlement. So this one, it's half hour after the market open, and normally, from the previous experience, at the 10 o'clock, the market will go kind of like volatile during that period when the data comes out. So we'll see what's going on here. So this data is represent for the kind of like the consumer confidence, and this data good means the people are thinking we are not in the recession, and we are going back to normal days. So, and as we know, the Federal Reserve, they almost start with the interest rate hike. So this data is good, means good. It's totally different than before. Like, when the CPI, before the CPI drop, this data is good, means the Federal Reserve can increase more on the interest rate. But right now, we almost close to, like, end to the period of the interest rate hike. So if this data is higher than the expectations, I would assume today we will go high, like we will close to the high level. But if this data is lower, means it's bad, means we are heading to the recession. That's all the explanations. I mean, it just depends on how the market explains this data. But from my perspective, this data is we just compare to the real data to the expectations. And what I would do, if the data is bad, we will see a big drop. Probably not big, but it dropped like 0.5% or to 1%, and then we can try to buy the dip. I don't think we will have the big drop, but if we see some drop about like SPX around the 4,000 level, 4,100 level, we probably gonna buy the dip for short term, like the day trade. Let me see another one here. Okay, so this is the okay. This is for the downgrades. Let me see anything I'm pretty familiar with. The PayPal and Twilio PayPal. Okay, let me double check those two, because I know those two are pretty famous stocks, and people always ask for what's going on for the Twilio, what's going on for the PayPal when the stocks have the big movements. And I know some like smaller stocks, like smaller values stocks, they currently, like for this period, they are doing pretty good, especially after the earnings. Let me see over here. Okay, looks like it's after the big drop. I mean, this is 5 minutes chart. Okay, for the is this the earning? Oh, I see. So it's earning, after the earning, it gives a big drop over here. Let me check. But it's not too bad, I believe. It just dropped about, oh yeah, it's 12% drop up, and yesterday was basically like it's basing at the bottom. It's basing at the bottom. The pre-market, it dropped about like 1%. Let me minimize the chart over here. Okay, it's not very good. If I mean, if yesterday they can actually go above this line, we could do like short-term bullish on this one, but it's totally broke up. So I don't see any chance on this one, unless you want to short this stock. If you want to short, you probably can short at 49 this level. It probably gonna give some bounce back because it dropped too much on the earnings days. Let me check with PayPal. Oh, it's at 64 levels. Last time when I see the PayPal, it was like 90 something about this level, like 90, 80 level. But haven't checked this stock for a long time. So this one is, let me draw a rectangle. Where is the rectangle? Rectangle over here. Okay, so yeah, it's pretty clear. So this stock basically broke down to another like lower level, and I would short down this one. So basically, I'll do the horizon. Okay. So once this stock bounce back to 66, or when the 20 days line go, it's going with the stock. So when this line goes down, touch this level, and the stock bounce back to 66 level, I will give a short. I'll probably just gonna open a short position on this one. Okay. Let me see anything over here. Okay. For who is new to our channels, just click the thumbs up and click thumbs up for us, and I'm gonna answer the questions after I go through everything with the news, with the stocks, and I will gonna answer the question. PayPal's those for the downgrades. Let me check with a upgrade. So the upgrades normally we see a big, bullish. Sometimes gives a lot of like the day trades opportunities. Okay. I don't see anything like I'm pretty interested for the upgrades. Those are something like with a smaller like values. I don't think anything like I'm pretty interested in for the upgrades. I'm gonna check another one. Oh yeah, you guys know yesterday the Elon Musk, he just tweets at about like 10 minutes before the market close, and he just said like he is very excited to announce like he just hired a new CEO for the Twitter. So he's using the she, like she will be starting in the 6 weeks. But Elon Musk doesn't, like he didn't give any like information for who will be the CEO for the Twitter. So we'll see. But this news is actually a good news for the stocks for Tesla, because last time, I remember last time when he bought the Twitter at October last year, and the Tesla started to drop. I remember it was like 300 level. Let me check. I remember it was like 300 level before, like after where it is, April. Oh yes, it's right there. It's right there. I believe it's right there. And he announced he spent like $44 billion on like acquisition, like basically do the merge acquisition for the Twitter, and the Tesla stock was like 400 level actually, and it just all the way down to the almost like drop below the 100, and then it gave a huge bounce back. And I bought the Tesla at this level, but I couldn't hold the Tesla all the way up to 200. I just sold them, like all my Tesla shares at 145, and I just missed the rest of the uptrend. But right now, I know a lot of people are thinking what I'm gonna do for the Tesla. So Tesla is basing at this level, and I did a pre-market analysis. Let me check with my notes here, because the Tesla is 161 to the 170. So this level is like consolidation level. Once the Tesla break to over like 175, we could see the stock all the way to the 180 to 199, this level. As long as when the stocks breaks like 200 level, we could easily see Tesla go above 220. So there are some like significant points for the Tesla. Just give me a second. Yeah, significant points for the Tesla, it will be the 175. After the 175, you can buy, for the day trader or like short-term trader, you can buy Tesla and see if the Tesla can all the way go to the 200 or about like 199 to 200, 201, about this level. You can just eat the short-term profit, and after, or you can just watch 200 level. If the Tesla break 200 level, it could easily go 220 to 250. So it could go this after the 200. It could go this. Yeah, they have the pretty huge space to go. For the Netflix, Netflix. Yesterday I almost bought the Netflix, because I should think for the Disney earnings, like why Disney like a lot of people, they cancel the subscriptions on the Disney Plus, Oh, by the way, like please just click the thumbs up and click the subscription to our channel, and I will share the pre-market data, pre-market news, like everything you want to know before the market open. All right, back to the Netflix. Yeah. So what I told, like yesterday when I see the when I saw Disney stocks, like after the earning, uh, their uh, core business actually drop. The investor feels like disappointment. I should think like probably in Netflix they acquired a lot of customers, like clients, or they actually acquire a lot of things from the Disney. So yesterday, what I remember, I drew a line over here. Yeah, it's classic breakup. It's pretty classic. Like the stock actually go above this short-term like downtrend line, and I'll go a I'll draw another one so you probably can see what's going on, like what's gonna happen for the Netflix in the future. The path. Okay. So at the bottom here, 285, I will see the first wave. We go a second wave for almost like 20 April 4th to May 4th. Yeah, about like 1 month for stock pullback, and then we are now like break the downtrend line, so we could see that the Netflix go about like 300. Oops. How can I? Okay, a little bit ugly, but it's okay. So we could see the Netflix go above, like around the 170 levels, like back to the previous high over here. But I believe we will see some resistance over here as well. So make sure you guys just watch the resistance line over here, like about 349, 350-ish. So once the stock can break this line, you can just assume, or you can hope the stock will go another upward. So I'm looking for a 373, but I'm not gonna chase this. I'm not gonna chase this candle. So normally, when the stock breaks this downtrend line, it will pull back, or it will give a little bit of consolidation at this level, and after the consolidation, probably 1 day, 2 days, or 3 days or more, like after the consolidations, the next time when I'm gonna trade this stock is when Netflix breaks 350. Once the Netflix breaks 350, I will chase it, and I will chase and hold until at least 365 above. I'm not sure it's. I mean, I cannot say it will go to the 370, but once it breaks 350, I believe it will to the 365 to 370 level. So I don't want to eat the last. I don't want to take the, some risks at 370, but I will try to hold until 365 once it breaks 350. Alright, Netflix. Let me check with the Google. The pre-market. Oh, the Google yesterday was like gap up. It gapped up, and okay, so there was a lot of like trading area over this level. So we are now in the resistance level. So be careful. I mean, I don't like this gap. Honestly, I don't like this gap. So we are now at this level, and this is the gap. Okay. So we have the big gap over here, and now we are in the second one, and the second one, a lot of investors or the traders, they are in this level. So what I will do for the Google, once Google breaks 119 to this high, like to previous high, about 122.50. So once Google price is above this level, like after this consolidation area, I'll see another upward trend after that. But I mean, at this level, just don't chase the Google. But for the long term expectations, I still believe the Google this stock is still in undervalue compared to the other big tech stocks. You know, like the Apple, Microsoft, and Nvidia. Compared to those stocks, the Google is still undervalued. So if during the not January, like June and July, during these 2 months, if there was any chance for Google back down to the 107, 107 or 110 this level, I'll definitely gonna buy this stock. And what my goal for this year, I believe Google will be the next. I mean, Google will be the next Nvidia. So this one could probably gonna go about like 140, like to the previous high. For the first half year, we had Microsoft, we had Nvidia. So those 2 stocks are pretty good during the first half year. And I believe for the second half year, Tesla, Google, Amazon, those three stocks are pretty good for the second half year, especially for Google. So, but don't chase at this level until it gives a back, like pullback. I mean, at least a pullback to the 110 level. So this level, I just add to the watch list, but I'm not gonna chase this. And there was one thing I want to share with you guys. Yeah, please make sure you guys thumbs up and give us a thumbs up, and also subscribe our channels. We are doing a professionals. We are doing like we are professional traders, and we also give a pre-market analyst, and we give the pre-market news, pre-market stock analysis. So yeah, I'll go ahead to share with a interesting stuffs to you. Let me open this. Yeah. Oh wait. How can I open this? Yeah, this is what I found. Just give me a second. Okay, so this is what I wrote for today's like pre-market. My personal thinking on this one. So for the small cap, so the data started from the 1926. There were 76 consecutive years, like in the 6 months following the midterm elections, and with average return of 18.3%. And compared to the average SPX return, it's only like 13.7. I should add the percentage mark over here, but whatever. But this year it's like a little bit different, because we are in the interest rate hike period, and also we are in the balance sheet shrinking, and also the M2. The M2 Federal Reserve, they decreased the M2. And also some financial sectors for the regional banks gave some black swan. So for the small cap stocks, they were doing pretty poor for the first half year, but we are almost at the end of the period for the interest rate hike, and then the regional banks, the risk for the regional banks is almost over, and I believe the small cap could be another trade, like underlying part to trade for the next half year. What I was looking for is IWM, so it's Russell 2000 ETF, and there are also I gave some levels for the IWM. So I cannot tell you when exactly for IWM go, maybe go to like 200 or 250. I cannot tell you when, but there was a price range. So once the IWM breaks 175 to 180, so once the stock breaks this level, do I see the arrow? Oh, okay, I see. So once the stock breaks this level, and we could easily see, I would assume this ETF will go to another bull market. So just watch this level, watch this range, 175 to 180. You can just add IWM to your watch list. So when you see this ETF breaks this level, you can find some. You can either trade IWM as an ETF, so with lower risk. When you trade the ETF, we take like lower risk. But if you are aggressive trader, you can just search some kind of like small cap stocks, like you are interested, or some like small caps with pretty good candles shape. You can trade. It's for small cap. It's easily like 20%, 30% in one day. So I'm gonna watch this ETF until it breaks like 180, and at that time, I will share what kind of the stocks, or what kind of the underlying equities I'm looking for, and I'll share with you guys. I think that should be all the pre-market information news I gave you guys. Let me open the questions and see if you have any questions here. Okay, I'll go start with the. Okay, so GM, I already answered the question for the GM. Oh, thank you. I hold Apple positions. My average for 165. Let me see the Apple. You are at 165. Currently, like your position is pretty safe right now. 165 is over here. It's pretty safe right now. But I'll give you a suggestion for. Oh, wait a second. Okay, you can set up the trailing stop loss position. So it's basically it's tracking your positions, tracking the price. So you can just set up like stop loss position when the Apple price breaks down this level, there's a big gap up at the May 4th, on the May 4th. It's because of the earnings, similar to the Microsoft. So big gap up after earning, and after earnings, so this candle can be assumed like the level we take loss after the stock dropped below this level. So you can set up 170 ish, like 170.76, but you just give a little bit, like give more little bit space. You can just set up like 170 at your stop loss position. Or there was another strategy if you want to sell this stock at this level. You do like two hands preparations. So first one, you set up the stop loss at 170, and then you can do the options. Since you have positions on your hand, so these positions can be you can trade on the sell covered call. So what you're gonna do is you sell covered call at 175 or 177, maybe next week, or expiration dates could be next week or after next week, and you probably gonna take about $2, $2 or $3 on the options premium. You have to times 100, so it's basically $200 to $300 on the premium. So if the stock's not going, if it's staying at this level until the expiration date, you take all the premiums on the sell covered call, which means you are currently at 165 level, and you take $2 or $3, your cost will go down about like $2, $3. So I assume the option costs $3, and your position at 165, your cost is 165, and at that time your cost maybe went down to the going down to the 162. So this is another way if you want to sell your stocks with a little bit more profit. Let me see where I'm at. Okay, Apple 65. Okay, you had Apple for about 5 months. 5 months. So I believe you are at pretty good price. Like 5 months before, it was like January. Like you actually bought at the bottom. So if you have the Apple stocks at this level, I don't want to recommend you to sell the stocks, like all your positions. I don't want to do that. You can use the strategy I just shared with the Oliver. Yeah, you can use my recommendations for the sell covered call, and you make extra money, and you can still hold the Apple stocks. The Apple companies, I think they give the dividends every single earnings. So you can just take the dividends, and also you sell covered call with extra premium, and extra premium can help you decrease your cost. For 5 months, it's pretty good price, 124. I don't think Apple could go back to 124 this level. So what I would do, if the Apple, for those who doesn't have the positions for Apple, I would recommend just wait for the pullback about like 160 to 150 to this level. You can start buying the stocks. I don't think Apple will go all the way down to the 120 to 130. It just passed. If you don't have the stocks, you probably won't see the stock back to this level, at least for the near like, unless they are like black swings similar like to 2020, the everything just go down about like 50 to 60%. Otherwise, I don't think Apple will go back to this level. So you're at pretty like golden space. This level is pretty good. Okay, for those who are new to our channels, please click thumbs up and do a subscribe our channels, and I'll share all the pre-market news or any stocks you currently have. I'll share the opinions, and also I also do the pre-market. Okay, let me check with Google. Yeah, I just checked the Google about like 20 minutes ago, but it's okay. Yeah, those three lines I just drew the three lines over here. So what I would say, don't chase at this level, because this level is pretty dangerous. You see a lot of people are trading at this like basically this big range, and currently the stocks gapped up to this range, but you know it has pretty long head and long leg. So I personally I don't like this candle. This candle gives me pretty bearish. It's not bullish. It's pretty bearish for this candle. I mean, at least to me. It might goes up to 120 to 122. You know, 2 to 3%. About like 3%. But I don't recommend you chase at this level. But for the long-term recommendations on the Google, as I said before, the Google is pretty undervalued compared to the Microsoft, compared to the Nvidia. So once the Google stocks pull back about like 110, about 110 to 100 level, just don't hesitate. Just buy this stock at this level. But right now, at 118, 116, just stop chasing. I don't think it's a good time to buy. For the June and July, I personally see a pullback for the SPY, like SPY. I personally think the stock will pull back to the below 400. So, but I don't see. I check a lot of like YouTubers. They said like we are in a recession and stock markets will go down to the 150, 140. I mean, it's bullshit. So it's bullshit. I mean, at least for this year, I don't see it 350, 360. What my recommendations, as long as the stock back to 388, 380, like around 380, 390-ish, just I'm gonna start buying the SPYs, and also for the Googles, absolutely. Google is undervalued, still undervalued. And also you can check Google, Amazon, and Tesla. When the SPY pull back at this level, you can pick some, the stocks, like I said before. Any questions? Okay. Yeah, I think that's have answered all the questions you have. And if you guys don't have any questions, that's I'm gonna head out for today. So I don't think, yeah, everything should be good. And good luck for your trade. And please click the thumbs up and click the subscribe. Yeah, click thumbs up, click subscribes to our channels. And we are I'm a professional trader, and I'm sharing all the pre-markets. I'm sharing all the news I have read, and also give the individual stocks analysis. Uh, and after everything, I will answer the questions you might have. Alright, thank you guys, and good luck for